Hey there, traders and traderettes. This is Dr. Greg McLeod from Elite Traders University, and welcome to our uh, weekly Forex forecast bulls versus bears for the really the last full week of not even probably it's a partial week. It's a Christmas week, and it's gonna be a shortened week. And I wish you all guys a Merry Christmas, Happy Holidays, Happy New Year. The markets will be closed on the 25th, and you're going to have an abbreviated, shortened day um, um, on Christmas Eve. So it's going to be a shortened week. A lot of traders have already checked out, so there's been a lot of volatility. But this is going to be the last Bulls versus Bears for 2024. And boy, was it a great year. I hope you guys had a great year. Looking forward to thrive in 2025. Okay, so let's get started. Before we get started, I want to direct your attention to the risk disclosure on our screen to make sure you understand all the risks associated with foreign exchange trading. And my name is Dr. Greg McLeod, and I've been doing this for close to 30 years. I'm one of the leading authorities of short-term day trading, known as scalping, one of the most highly cognitively demanding forms of trading for fast compounding profits. In fact, that's my mission, to help traders like you become successful in trading using my three-step approach. Okay. And so if you want to find out more about that, you can go to elitetradersuniversity.com/apply and book a free strategy call with me or a member of my team. Be glad to see if this works for you. And if it does, we'll welcome you to the family. Okay, let's get right to it. Let's get to my one of my secret tools here. I also want to remind you that I do have the Gold Rush Blueprint book on sale now, and the course, and it's a wonderful course for trading the. If you want to trade gold, if you want to make money trading the Gold Rush Blueprint is for you. Okay. Agenda: we got the dollar index, euro dollar, pound dollar, Aussie dollar, dollar yen, dollar CAD. We'll look at gold, silver. Maybe we'll take a look at some other things too. S&P 500, the indices, and we're going to start with economic news. And then I want to take you to one of my favorite tools to trade in the markets. It's called My Market Heat Map. My Market Heat Map is an arrangement of currency pairs by percentage change. It tells you what's hopping, what's popping, what's dropping, and what's not in the market. Green is in an uptrend, red's in a downtrend, and gray stay away. It's real simple, but it's not just the heat map, but it's a full suite of tools, especially designed for traders. So a one-stop shop is just $19.99 a month. You can go to the App Store or Google Play, but you can buy it on the website, or you can just use one of the six powerful heat maps is listed right on the front page, absolutely free. Come to My Market Heat Map. You can see what's moving, what's shaking. We see dollar yen, dollar Swiss, dollar CAD. The dollar is the top spot for uh, this Christmas week of trading. We're going to jump right down to the economic calendar, which is absolutely free too. We can see what we're going to have some Canadian GDP numbers coming out. Their GDP, or their economy is slowing, and it's probably going to slow even more when those tariffs hit when Trump takes office. 0.3% forecast call for 0.1. The Canadian dollar should be tanking and the dollar should be rallying. We'll take a look at that chart next. And then we'll talk about then at 10 o'clock. Actually, this is January 7th. Oh, we're jumping ahead here. Okay. Well, is there any news? Is there anything going on for the 23rd to the 26th? Actually, look at this. Thursday, we have the day after Christmas, initial jobless claims. We're gonna have Monday. We're gonna have some Chinese data as well, and my economic calendar is like totally frazzled. Right? It doesn't know what day it is. Okay, do we have something going on? There we go. There it goes. Monday. Yeah, we have Canada data, and then at 10 we're gonna have conference board consumer confidence supposed to rise from 111.7 to 113. People feeling good out there buying stuff. Dollar will be strong. And then we have later on that evening, we're going to have the Bank of Japan monetary policy meeting minutes. They left rates unchanged, so we'll see what their forecast is and what for future rate hikes. They're still the few countries that have a very low interest rate. And then a few minutes later, we're going to have the Reserve Bank of Australia talking about their rate cut meeting minutes, and then we'll have the initial jobless claims. I mean, that's it. I mean, at the 24th, we're not going to have any economic data there. And make sure you check with your broker to see if you're trading forex or international markets. Sometimes um, they will close early on on Christmas Eve and Christmas Day, and then they open up on the 26th. Also, you might see wider spreads, very volatile price movements, and things like that. So be careful out there if you're trading the holiday very liquid markets. You need people to make a market. If those people are on vacation, then all of a sudden you're going to have big gaps in price. If you're on the right side of that gap, you make money. But if you're on the wrong side, it can really smoke your account. So trade small, keep your stops tight and your friends closer, right? Okay. And then so Monday we're gonna have on the 30th of next Monday. So you're looking at Chinese NBS manufacturing PMI supposed to rise from 50.3 to 51. And this should be good for the Australian dollar. Might get a little reprieve from its drop. Remember, China is a big trading partner of Australia, and where the Chinese economy goes, that's where Australia usually goes too. Caxton manufacturing PMI, those going to drop from 51.5 to 50, and then we'll go right into January 2nd. HCOB manufacturing PMI supposed to drop from 43.1 to 41.9. And the German manufacturing PMI, they just giving up a forecast. It's going to be 43, should be lower. However, the euro's been rebounding lately, so it's been very interesting to see. We get these little pullbacks during the New York session and then drops later on, right? So watch that euro roller coaster. 8:30, we're going to have the initial jobless claims the day after New Year's. We're at 2025, guys. Where does the time go? Then we're going to have German unemployment change supposed to drop from 7,000 to 5,000, which is good news for the German economy. Dollar, this will impact the dollar. If the ISM manufacturing PMI supposed to rise from 48.4 to 48.5. And then we'll have the HCOB services PMI out of France supposed to rise from 46.9 to 48.2. And the HCOB services PMI final, they just gave up giving it forecast. They said, what's this going to be 49.3? And the forecast, that was the previous number. And no forecast is given. Inflation rate year on year in Germany is supposed to drop from 2.2 to 2%, which will be good for German consumers. And then inflation rate year on year in France supposed to rise from 1.3 to 1.6 as that country grips the prospect of a new government, government stability, as Macron has gotten a no confidence vote, and usually markets don't like instability. However, it's probably all priced in already. All the bad news in the euro is already probably priced in, so we might get a rebound in 2025. Italy, unemployment rate 5.8%, was the previous number, no forecast given. Unemployment rate also not given a forecast, 6.3%. And then lots of European news, inflation rate. So the euro is going to be in play on the 7th of January. Going to be a lot of interest in the euro. And we'll just, it's something to look at. The CPI and the core inflation rate are all going to be, so that Tuesday is going to be very big. 8:30, we're going to have Canada balance of trade and ISM services PMI supposed to rise from 52.1 to 54, and that could still be very strong for the US dollar, right? And so we'll be back on Tuesday. We'll probably have our bulls versus bears. So I won't go any farther than this for the economics. Let's get to the technicals because it's going to be an abbreviated week. And hopefully you'll just be able to spend some time with your family and put those charts away, put that phone down. Know the markets aren't open on Christmas Day, so let's go ahead and take a look at, we're getting a little bit of life there. But again, we got the dollar pairs up and the Aussie pound and euro Kiwi down versus the US dollar. Very, not a whole lot. This is Asia session right now. I'm doing this recording. Let's go to the technicals. Let's go to the DXY. This is the US dollar index. The US dollar index is a basket of currencies versus the US dollar. And so when it's going up in this upward direction, like we see this uptrend, higher highs and higher lows, this means that the dollar is strong and other currencies are weak versus the US dollar, namely the Australian dollar and the euro and the pound and the Canadian dollar and the Swiss franc and the Japanese yen are all taking a back seat to the US dollar. Lots of strength in the US dollar. We can see this higher highs and higher lows trading nicely above the 50 moving average, shows that we're in a strong uptrend, right? And so that's in that directional move. We can drop it down to weekly, and we can see that we broke out over some key resistance at the 106.32 area. We had a low at 99.92. We tagged a double bottom, and then now you're it, tag you're it, and then we broke we broke above this wicks here. So we just got our close, and we think that the dollar will continue to rally, even in spite, and this is very contradictory, and many of you probably are very confused, that we have interest rates cut. The Jerome Powell and the Fed cut rates, the central bank rate at 25 basis points, but the dollar is still going up, which is remarkable. Usually the dollar trades as a reserve currency, and people use it to fund other things such as the stock market, or they'll buy high yielding currencies. But the high yielding currencies really aren't yielding that much. And the strength of the U.S. economy with a president committed to lower regulation, lower taxes, and more business friendly. We're seeing more money flowing into the U.S. Investments, right? And considering the shakiness of Europe, the dollar is the cleanest shirt in the dirty basket. So we can see that bulls versus bears, we are bullish the dollar index. Can't trade the dollar index, but these are things that we can trade. We can trade Canadian dollar, right? It's a monthly chart. But we are coming into some resistance. I mean, this is third time's a charm, just ask my wife, here we go. Third chart, 1, 2, 3 times, knock 3 times in the ceiling. We're going to knock on the ceiling about the 148.77 area. We're a very strong uptrend, with some very strong pullbacks too. These long wicks are no joke, right? Go to a weekly chart and we can see nice breakout above a flat consolidation. And so this solid breakout there. So you look to a daily chart, continues to make it toward. We still got a little air gap there where price can continue to run. So bulls versus bears, dollar CAD. We are bullish dollar CAD. Okay. Let's go ahead and take a quick look at the anti-dollar, which is the euro. And let's pull up some euro action. All right. Let's go to the monthly chart. And we can see that like the dollar is going up, the euro is considered the anti-dollar. The United States of Europe, there used to be other currencies like the lira and the French franc and the Spanish peseta. You have or peso. You had different currencies, but they came together as a currency union, as a block called the eurozone. And so now they use one currency, the single unit, and it's called the anti-dollar because when the dollar goes up, the euro goes down, and vice versa. And we can see that we're trading below the 50 moving average, which is a bearish signal that we should be selling the euro. And then we look at the weekly. We're also trading below the 50-week moving average. Here's our 50-day moving average. Actually, we're finding a little bit of support here on the weekly, and we might get a little bit of a rebound, a little respite for Christmas. Well, traders around the world are giving thanks and giving gifts. We might see a little bit of a rebound here on the euro. However, the trend is down, and if we can come back and tag that 50 moving average, that would be a great a great short. We got a double bottom, but a double bottom in a downtrend, don't get fooled by it. It probably won't last very long, right? Uh, so bulls versus bears. I am bearish the euro, medium term, long term, short term though, slightly bullish. Okay, slightly bullish. I mean, like running for a quick scalp. Let's take a look at gold, right? No, I never, even though I wrote a book on gold, you probably don't hear me talk about gold a lot. Um, yeah, because it's just kind of like a one. It's moving. You know, we got a little bit of a pullback, but we've been struggling with this area here, this high of 2007 2,794. We've been struggling with that for a while. And it's been a great scalp, right? It's been a great scalp because you're just trading between two levels and you're buying the support and selling resistance. So it's like a ping pong ball. The trend is up, but for the long term, and I mean, we've got to be able to break that. And with the dollar being strong, gold is the anti-dollar too. We're trading gold versus the dollar, right? And gold doesn't have an interest rate. It doesn't give you a yield. It doesn't pay a dividend. In fact, there is a cost for carrying. Can you imagine the security, putting in a safe, protecting it. And so it actually, if it's not appreciating, it actually starts costing money to carry gold. So that's why, it's not the best long-term storage for wealth. And I'll show you something that actually is, but you can see we're just moving sideways, and it's a great scalping trade where we can buy support, sell resistance, rolling stock, kind of rolling up, sell it, and buying it and selling it and buying it and selling it. And I know guys that make hundreds of dollars a day, like one of my students named Jay, just bought himself a condo in the Dominican Republic and trading on the beach. Great, big salute to you. And so guys just trading. So bulls versus bears, I'm long-term bull, maybe short-term bull, but hey, we top out around the 2717. We get old resistance. Every time we get around that area, it sells off and drops. Okay, so medium term might be a little bit bearish. Okay. It's like I'm a little bit country, I'm a little bit rock and roll. Remember, like Donnie Marie Osmond? I'm a little bit country, he's a little bit rock and roll. Okay, so there's a little bit bulls, a little bit bearish. Just so let's take a look. Let's go back to the Europe, go back to the pound, and we can see. Look, we're pulling back. I mean, we dropped to these support levels, which I've drawn for another class. You can see that when we bounce these areas go back for years, right? They go back. Let me see. Price has a memory, right? In fact, this was the King Charles coronation rally. After this was the Queen Elizabeth, her death and her mourning, right? And you can see that clearly in the chart, history in the chart, where when Queen Elizabeth passed away, they saluted the pound, that like it bowed its head, bowed down, and then when Charles was coronated, it went up in an A, B, C. So now we're selling off one, and maybe we get a bounce higher for a rebound. But let's take a look. Kind of hard to tell here. We do have a nascent uptrend here, but we also have a downtrend too, right? We got this downtrend, right? And really, we were down from like two something, right? I remember when the pound versus US dollar was like 2 to 1, right? So we're really, really deep downtrend, right? So we really haven't really gone anywhere in the past, 20 years. Nah, not really, right? And this was like Brexit, big or yeah. So yeah, these big moves here. So in the context of the entire, past 20 years, yeah, we're in a downtrend, right? So it's a cyclical downtrend. But if you try shorting this here, then you're going to lose money. You're going to lose your shirt, right, in the retracement, and you have to wait like 6 months to a year for it to turn back in your favor, right? So looking at these turning points is very important, and we are also, hitting some, these we're hitting some resistance support right in here. If we take these swing points here, so we're like in this little confluence, little congestion. We're below the 50, hitting the trend line. The weekly doesn't really give me a whole lot, other than we are moving down, but the speed of our descent is like we're hitting all these support lines. This one here, we bounced off this one, and we have this one here. So we go down to a daily chart. See, you got double bottom, bulls versus bears. I'm like short-term bullish, but longer-term bearish, right? We might come back to this 2777 area, 71 area, right? This the high of the December 6th, 2024. So we might rebound there because it's a typical double bottom range. Also, the 50 period SMA, the 50-day moving average is sitting right there too. I think it'd be a great bullish target. I would probably scalp small stuff in between there, right? Go down to a 4 hour and you can see, a little bull flag popping up, right? But I think once we hit this resistance line, then it'll be time to get short. So long term, medium term bearish, short term bullish on the cable, the pound versus U.S. dollar. Let's go to the other side. No, I'm actually going to go across to dollar Swiss. Take a quick look at that baby and look at the monthly chart. And it's interesting because uh, the Swiss franc had been pretty strong. Double bottom of the Swiss franc on the monthly is exceedingly bullish. Weekly chart, we can see that bullish leaving the station. We're currently trading at 89.47 or so, and we could get up to 92. So that's like 500 pip move. I probably won't hold it that long, but I'm scalping in the direction of this trend. We've got this very strong level of support. Monthly chart support is huge, and we have overhead resistance there. So the risk reward looks pretty favorable for longs to continue. Drop it down to a daily chart, right? Like we are cycling. The Swiss franc, dollar Swiss is cycling, gets so far up, drops, but it's a channel, very clean channel. And so I love to get back a retag of the 50 period, and it's following the 50 period moving average too. So the 50-day, we come back, we're above the 50-day, which is bullish. Love to see a price come back down and tag that area for us to take a good entry, right? And okay, let's go ahead and let's take a look at dollar yen. We'll get to go to the other side of the world here. I don't know why Mr. Yen is. Oh, it's up here. That's why. Let's go here and do our remove our drawings there and hit to the monthly chart. Monthly chart is way above the 50 period moving average, but there have been some steep drops on the way up. It hasn't been a smooth. We had some nice smooth run from 2021 all up to 2022, like hardly any bearish moves. Now we're getting, we get too comfortable, and the downdrafts have been pretty strong and severe, but not enough to actually take the trend out. The trend is still up, right? On the monthly, we drop it to a weekly. We can see we bounced off the support, and now we're above the 50-day moving average with the overhead support. We're currently trading at 156.80 at the time of this recording. And we have a trend channel with the upper bound somewhere around the 167 area. And we're very close to the old high. This is the high of the last 20 years, 161 area before we had the drop. And we're retracing that, and we're not too far away from that old high. We're about 500 or 450 pips or so. Bulls versus bears. I am bullish dollar yen on the weekly. daily, looking at the bullish 4 hour, and we're just getting started to start another leg higher, right? So um, dollar yen looks good. Okay. Um, let's look at let's take a look at oil. And you heard in the news that Ukraine was able to use a drone attack, and they actually took out a Russian refinery. And so that is huge geopolitical because before, Ukraine was off limits. Was off limits of the using those weapons to attack Russian oil because the countries even though we have an embargo or boycotting Russian oil because of their involvement in the Ukraine war, they're still cheating. They're still sending oil via other nefarious supply chains and other ships, and that oil is making its way on the global market. Um, and so he said, well, if it's illegal, why do we blow it up, right? It should be a free target, but it's a lot of optics going on, right? Um, and oil price would be a lot higher. But what we have here, we just got below our monthly chart is trading below his 50-day move 50 month moving average, which is pretty bearish, right? Last time we got below that sucker, we dropped down to like zero, right? So so this is not a very good sign if you're a bull of oil. And I'm not. I'm already bearish. I'm bearish oil. But we've been in this long consolidation. We also have an incoming administration that's committed to energy independence for the US. Drill, baby, drill would mean that's what we did back here. We drilled, baby, drilled, and we drilled a hole in this chart. And my thing is we will come back and retest this again, and it might happen very fast because look, we had a long period of consolidation before the drop, sideways consolidation, right? We have sideways move, consolidation, and then the break. And the break it was fast, guys. So I'm watching for the same similar kind of pattern, consolidation, and then some type of very massive break that will just start busting through these areas. Currently trading at 69.75 on WTI crude, West Texas Intermediate. And it's been stabilized, even in the face of a stronger dollar. Usually oil goes in the opposite direction of the dollar. The dollar is up, oil is down. Dollar is still going up, and oil is holding its own. And even after the attack, we really didn't see much of a move. We might see an overnight move or a move in the morning um, to reflect this. But given that drone attack on the Russian refinery, there wasn't really much movement in oil, which is saying if the geopolitical things aren't moving oil up higher, then there must be a lot of selling going on, a lot of oversupply. China is still not online, not consuming as much oil, and pipelines, all kinds of oil infrastructure are going to be back on pushing more supply. And you also have the different nations around the world who are running deficits. Strong dollar is not helping them. And so they have to produce more oil, guys. So with all that supply coming up and, we might see a settlement of some of these wars and things at the inauguration of President Trump, then the geopolitical risk premium comes out of this, and this probably really falls before they even start drilling. So I am bearish oil. Long story short, bearish oil. Okay. Let's go ahead and I'm going to check. Uh, we're going to check so let's look at the the E-mini S&P futures contract, and you can see that we had a really nice rally kind of after the interest rate, Jerome Powell cut interest rates, kind of a bearish, it was a bearish cut or hawkish cut where he cut, but the uh, the dollar went up and the stock market went down, which is not that's not what's supposed to happen. When they cut rates, usually the stock market goes up. Now, it went up the day after, went up Friday. I'm removing these drawings, and you can see that long wick on the monthly chart. I mean, it showed up, boom. I mean, that's the weekly chart, but that's monthly. Monthly, you're not going to see anything happening. It still looks great gains, higher highs, uptrend. But we want to, I like walking. I like analyzing through using multiple time frame analysis or MTF, and walk it down from a monthly, then walk it down to the weekly. There's 4 weeks in the month. Walk it down. You can see that wick was that the Fed rate cut, the hawkish tone out of the announcement, and coming back from that low. I mean, like a 3% move down and then a move back up. And it's like, wow, we were up. It's like, yeah, we're just back where we were like 3 weeks ago, right? Look at a daily chart, and you also can see it. We broke through the 50 moving day average, a lot of technical damage for the S&P. But, we got long wick candles, buyers stepped in, and we could snap back and keep going after this retracement against, there's a difference between a retracement and a reversal. And this looked very serious. I mean, look at this. This is huge, right? But it's a five-wave pattern, 1, 2, 3, 4, 5, A or 1, B or 2. We should see a little pullback and then an extension to a new high, right? They're looking at 8,500 on ES in 2025, based on lower taxes, or the tax cuts being the corporate tax rate being lower, also regulations rolled back, and the number of things, bringing up American jobs, bringing more production manufacturing back on shore. All that should be a boost to earnings growth, which is what the S&P measures. It measures the earnings growth of companies, and the higher earnings growth they have, the higher multiple they have, the higher this goes, right? So you might look at this and go, "Oh my goodness, this could go." It's a trend, uptrend, higher highs and higher lows. We do have a lower low, true. We have to have a lower high for have a reversal of trend, and we do right now. But if price continues to move straight up, then we're gonna have a higher high. If we have a higher high, then that's what usually happens. Every time we have a 5-wave correction or a 3-wave correction against the trend, we make a new high. So right here is a great, great area for S&P to continue higher, right? Don't listen to the negative Nellies, because we would have to have something very, if we were to tank, we need to break that low, and we haven't broken any of these lows. In fact, anyone that got in here never saw your stop hit, right? So we are near a key level of support, right? Or we're just gonna walk this trend channel, and we're bouncing off, and that's the angle of this rise. We're gonna hit, looking at hitting around 6,300, right? On there. So we look at a 2-hour chart, drop it down to a 1-hour, and we might see some type of a pullback. That may have been our pullback, though. That little hump right there. And then this thing will probably continue to run higher. We're bullish on ES. Okay, let's look at the Qs. In Q, NASDAQ, same way. 5-wave correction. 1, 2, 3, 4, 5. A, B, see you later. And this is like a gap, and this gap gets filled. We have basically a gap, right? And the rule of symmetry says we should see a gap back to the original price, right? Can past performance not indication of future results? However, it's 30 years I've seen this stuff happen over and over again. We make fortunes overnight, right? NQ, beautiful, beautiful chart, right? Inverted, it's the old inverted head and shoulders. If you study patterns, Thomas Bulkowski, I met Thomas Bulkowski, really great guy. You should get his book, The Encyclopedia of Chart Patterns. I highly recommend it. Texas man, fellow Texan, right? Encyclopedia chart patterns. Yeah. So you got that, measurement objective. You take the neckline and you measure the neckline to the tip of the head. Okay. And then you clone that like a sheep clone, and then bring in the clones. You attach that to the neckline, and what do you got? Higher high, right? It's also a Fibonacci expansion. There's all kinds of things. When you go enroll in Elite Traders University, you learn stuff like this. I look at that. 172 expansion, exactly, right? I know you guys are gonna be short-term day trading, getting in there, on a 5-minute chart and stuff like that, but you've got the win at your back, right? Above the 50-day moving average, we're looking pretty good. NQ. Let's go ahead and look at BTC or BTCUSD. Now that's not doing very well right now after a big rally up, and you can see big move down, and we might not be finished. If we look at this as our base, the launch pad, and we can take a Fibonacci from this area. This is our daily chart. 38% retracement is a typical pullback, and that takes us to about the 87,292 area. We're currently trading at 95,245. There's probably more. Our traders were calling shorts on this. Once we got this blow off top here at the high, all-time high, 107.91. which will probably give us an opportunity to enter the market to get back long again for our move back toward 150, right? If this support holds, we can take a fib from the wick low on August 5th, 2024 to the high that we hit on the 18th of December. And then let's say we did a half back, got to the 50% retracement. Well, then our 100% expansion is our typical target, takes us to 139,531, right? And so you maybe you can pick up some at 87,000 and you can make like 40,000. Again, it's not a trade recommendation. Everything's here for educational purposes and entertainment purposes only. I hope you're educated and entertained. And if you want to learn more, if you want to learn how to trade the markets, I'm a short-term day trader, scalper. I like getting in and out, and I don't trade any longer than 2 hours a day. And I spend the other hours on the beach or at a lake or going for a walk or traveling or helping my students attain financial freedom. If financial freedom is something that you're interested in, you may not be interested in. If you're already rich, you already have money, and your trading is perfect, then you don't need me, and that's cool. I ring the bell. I congratulate you. But if you need my help and trading is a chore and you don't enjoy it anymore because you just don't know who to believe, everyone's a scam, everybody wants some money, but no one's helping you make none. Well, I'm different. And if you want to find out, click the link in the description and book a free strategy call with me and see if my method is right for you. Okay? Spots are limited, and I only have a few places available for 2025. But if you respond, we got some guys that will take your call on the after Christmas. All right. Talk to you later. Peace and pips. This is Dr. Greg McLeod from Elite Traders University, wishing you a Merry Christmas and a happy and prosperous New Year's. God bless. Remember, Jesus is the reason for the season. Bye-bye.
If you felt a spark here and want to see how these principles can be used in your own trading, go to www.elitetradersuniversity.com/apply to book a free session with our team. We have helped hundreds of people remove the frustration and obstacles in trading to become consistent, highly profitable traders. These are proven principles that just work. Happy pipping!